Hello and welcome back to the Gold Newsletter channel. My name is Kai Hoffmann. I'm the @JR Mining Guy on Twitter, and together with our good friend Brien Lundin, I'm your host of this channel. Really looking forward to this conversation today because it is a company introduction, company we haven't had on, and it's a U.S. company, a U.S.-based company. They're listed on the NASDAQ. It's U.S. Gold. Ticker is USAU, and really looking forward to what they're up to these days. I've talked to the company couple years ago, lost a bit of focus or lost them out of sight. So I'm curious what they've been doing lately, and getting a first-hand update here from Luke Norman. He's the president over at U.S. Gold, and I'm looking forward to chatting with him. Before I switch over, you guys know the spiel. Kindly hit that like and subscribe button. It helps us out tremendously. Thank you for that. Now, without much further ado, Luke, it is great to have you on. And I see you're co-founder and executive chairman. Not sure how I made up the president part, but because it's usually CEO, president, director, all in one, sometimes even chairman. So
Yeah.
Thanks so much for joining me on the channel. Thank you so much.
Yeah, no, thank you, Kai. I really look forward to this. So appreciate it.
Yeah, I'm looking forward to getting an update. Like, we've chatted a couple years ago about U.S. Gold, and I have to admit I lost a bit side of the project and what you guys are up to there in Wyoming. So it's a really good time to catch up. But before we dive into some of the specifics and get a bit more granular on the equity story, let's start at 30,000 feet. Like, what is U.S. Gold all about, and what's your story?
Sure. Well, I mean, I started the company because it was a follow-on or a 2.0 to my previous company I co-founded with Jonathan Ord called Gold Standard Ventures. So this was going to be my second soiree into Nevada. We do have a very big exploration project in Nevada as well. But within our asset portfolio sits a copper porphyry just outside of the township of Cheyenne, Wyoming. So I started doing a deeper look into that project in 2019, and I collaborated with a gentleman by the name of George B. George had built some of the largest mines in the world for Barrick, gold mines for Barrick, and I wanted him to take a look at this project and see if it had merit. So within 12 months, he was our new CEO, and we completely changed our focus from exploration to development of the CK Gold project in Wyoming.
Fantastic. Yeah, thanks for that introduction. It catches us, gives us all a bit of a, what do you call it, same knowledge of the company. But second follow-up question gives a little more detail is about cap structure. Can you run us through that? Because I know your share structure is very, very tight.
Yeah, quite unique, right? For Canadians, Australians, it's confusing, and I'm sure it could be as well for those who are more sophisticated in the investment circle in Germany. So listed on NASDAQ, the reason being is, again, my previous company, Gold Standard Ventures, had a very, very high percentage of its retail investors were US-based. So listed this company straight away onto NASDAQ, and we're being very protectionist about dilution of the company. And I think anyone who's an investor should want to hear that from the company. So we have only 10.7 million shares outstanding. There are warrants and options, obviously, on top of that, and you're most welcome to go onto our website and see that. But yes, 10.7 million shares out.
Yeah, roughly 4 million warrants, I believe, as well. Yeah. Can you let us know where they're priced at in relation to the share price right now?
Oh, we have warrants spread from $6.15 all the way, $4.80 on the last issuance, all the way up to $14, I think, $14.80. So there's a large spread in that variance.
Yeah, exactly. And you're trading above that exercise price as well. Do you see some of those warrants being exercised already?
No, we have not seen warrants being exercised currently. They're quite extensive warrants in terms of timeline. But, we were trading up as close as near $7 not so long ago too. So,
Yeah, markets. Don't get me started. Don't get me started on the markets. But who are some of your largest shareholders there, Luke?
Okay, so our largest institution is the Phoenix Gold Fund that's managed by David Crichton-Watt out of, he lives in Europe, but the fund is flagged out of Kuala Lumpur. And then we have several very high net worth individuals who flirt in around the 5% range. And then, of course, management and insiders. So we have a very good grasp on the majority of our float. And then the rest, of course, is out in public hands in the public domain.
Fantastic. Yeah, just very last question. I think the most pressing one is how much cash do you have?
Right now, we're sitting around $4 million. We did a $4.9 million raise in April of this year. And we continue to be stingy on our spend, but there's no more big dilutionary events in our near-term future, or in our and I'll get to that later on, Kai. But we'll continue to do sort of maintenance raises if we see fit, and we want to bring in certain strategic people or investors. But we spent $30 million to date to get ourselves through what we're about to discuss. So.
Yeah, fantastic. Yeah, let's talk use of proceeds here in a second as well, for what you're using the $4.9 million for. But I want to learn a bit more about the history of the CK project. You only took it on in 2019, and of course there needs to be some work done beforehand. And run us a bit through the history of the project. What kind of work was done on it before?
Well, it's really interesting, the history, and I mean, I'll get into the history just briefly, and then into the more modern day history. Historically, it was discovered when they were running the railway through there in the 1800s, and there was a copper outcropping that some of the people that follow along, the geologists that follow running railway along, and it became a mining district called the Silver Crown Mining District, and there was an old Hecla mine there. And then fast forward to more recent history, we adopted the project in 2016, right before we went public. And it was a bit of an orphaned project. Okay, why is it orphaned? Well, the grade didn't look spectacular whatsoever, Kai, just on the headline numbers when we bought it. But it had about 1 million ounces in a PEA. But the deposit sat next to a state park. So, the grade wasn't spectacular, and it was very close to a state park. So we kind of bought it as an in situ play, never really believing that we were going to go after this from a development perspective. And yeah, a lot has changed.
A lot has changed. Like, the question is now, is the state park still there?
The state park is still there. Ironically, it never had any bearing on our permit process. We are a permitted, ready to go mine now. It was quite shocking. It was never an issue, but actually, we're going to be a benefit to the park post-production, and I can touch on that.
We'll get to that. I want to work through it a bit more chronologically, because I'm really curious, like, what kind of data you have available. Like, obviously, you didn't do too much of your own drilling. You took it over when it was already a PEA, available, 1 million ounces. So run us a bit through that. Like, what kind of work was put into the project, and what kind of data are you working with?
We did do quite a significant amount of drilling ourselves, both confirmatory and then really testing beyond the spectrums of what the historic drilling had done. So, we drilled a few holes right into the center of the deposit that bottomed out in mineralization. So we know that the mineral body runs well below what we've frameworked in our economics currently. But we were shocked with how high the grade is in the center of the deposit, which is a good shock, obviously. So we conducted a lot of that drilling. But we put in Doppler stations so that we could understand air movement, air qualities, etc. We put in drill stations monitoring any groundwater, any disturbance like that. We immediately went into a full array of engineering in 2020. So that's why we were able to move so quickly alongside with the Department of Environmental Qualities of Wyoming through this permit process. So a lot of engineering was going on in the background.
How many meters have been drilled in total on the project there, Luke?
Great question. I apologize, Kai. I couldn't tell you off the top of my hand, but it is extensive enough that we have, of course, a reserve, and that is the key category. And we all know, as mining investors, and I'm sure some of the less sophisticated listeners today would even be aware that there are different standards of mineral body, anywhere from a inferred all the way through indicated, measured, and then obviously bankable, feasible ounces. And that's what we have. So our spacings are very tight, and the understanding of the mineralization of that ore body too.
No, fair enough. So sounds good. You just mentioned you have a fully permitted mine now
Yes.
in Wyoming, and we're going to get to there, like how you got there. I'm really curious because you permitted off the back of a PFS, and we need to talk about that PFS
Yes.
and how extensive it was. Do you run us through some of those KPIs, like of that PFS, and some of the work you've done for the permitting side?
Right. So again, the most important thing for us with this project was, I said there was two concerns when I first purchased the project where I didn't really think we were going to want to go after it. So I'm not qualified to make that decision. That's why we brought in George B to take a look. Again, George, 16 years with Barrick, building their largest assets throughout from Nevada all the way into South America. So he had a very good understanding of whether a mineral system or an ore body will stand up to the tests of mining. So we conducted, obviously, as I said, extensive drilling, et cetera, to get to our reserve. But what we needed to do was to cap off our drilling and exploration work and get into the engineering so that we could understand if there was an actual economic case to want to go further into the permitting process. Because we could have just kept following mineralization. So we capped it off at about 1.5 million ounces of gold equivalents. Just briefly, the economics on the separation between gold and copper in this deposit, it's 70% gold, 30% copper. So we capped off at 1.5 million ounces. Why? Because that's 10 years of about close to 110,000 ounces of annual production. And now we had something we could advance into permits. Because, look, we could have kept building ounces, but if you can't permit them, they're not worth anything, right? So the amount of engineering, so the way George describes it, if I'll paraphrase him, seeing as it's me here today, is we basically did a full feasibility light in our pre-feasibility. So we have the engineering done, complete. There's a little bit of work that we still are completing right now for our full feasibility. We're just not racing out the gates to complete a bankable feasibility because there are some other additional benefits to this project that came along through this engineering process that we're now kind of optimizing and trying to bring into that final report. So, yeah.
No, fantastic. Okay, no, lots of course engineering work has gone into it, and water, of course, is a big issue. I've been trying to catch up on a few things in preparation of this interview. Of course, I think that's an interesting topic because the state park, and I remember from our conversations a couple of years ago, there's a bit of a lake, water sports and stuff are happening, and of course, the city of Cheyenne and Denver, to a degree, a lesser extent, obviously, but Cheyenne in particular, they need water as well. So, can you run us a bit through that water situation because I find that quite interesting.
Yeah. Well, I mean, now we're going to get into quite a story, but very interesting. So we do have permits. We have actually water rights that we have agreed upon with the state, and we'll be purchasing water directly from the Bureau of Public Utilities. Now, the state park, you're very right and well remembered, Kai. The state park, as I mentioned, sits right next to us. That state park hosts the two man-made lakes that are the water reservoirs for Cheyenne. They're called Crystal and Granite Lakes. Now, again, man-made, they sit in a granodiorite, which is very similar to the granodiorite that our ore body sits in. Now, they need more capacity right now. They need significantly more capacity into 2040 because why? Of course, population increase, etc. So their intent was to increase the dam heights at these two lakes and basically flood all of their recreational facilities that surround those two lakes. Unfortunately, is going to be a byproduct of that plan. Well, we are digging, a 86 acre at surface, 700 foot deep hole into that granodiorite when we remove our ore body. So now it's obvious that it's a huge solution for them for a water containment facility. Their current plan would increase their containment by 30%. Our pit post-production would more than double their capacity that they have right now. So we've done a lot of metallurgical work. We continue to do so. Acid cell leach testing, all these different things that we need to do to ensure everyone, including ourselves, that it will contain potable water without, allowing heavy metals to leach into the water. So it now, by all appearances, post-production, this pit will become a part of the park and an extension to the reservoirs.
Oh, there you go. That's a creative solution. Remind me again, I want to run a bit through the pre-feasibility study summary here. Some of the KPIs you mentioned earlier, 110,000 ounces, roughly a year production. Run us a bit through the cost profile as well. I remember it was done in 2021. And we need to talk about like what the plans are moving forward here. So maybe I think that's a good segue to talk from the past, bridge to the now, right? So
Absolutely.
run us through that a bit.
Okay. Well, just to qualify those numbers, so that 2021, you bang on, December of 2021. So December of 2024, this year, they will become 3 years old, which under SK 1300, which is the same as NI 43101, but it's the US version of it. Under that measure, we have to redo it every 3 years, and we can no longer post information about it on our website. So we're conducting an updated pre-feasibility study right now. The historic KPI numbers in there were based on $1,625 gold and $3.25 copper. So obviously, we're seeing a dramatic increase in the prices of both of those metals, which is great for us, great for all metals and mining companies. But we've also seen a lot of inflation. We're all experiencing, from the grocery store to the gas station. So our capex, our reported headline capex of about $222 million, we expect is probably raised up into the $280+ million range. But it's still ratio-wise is very similar to the shift in the price of gold and metals, etc. So one of the headline numbers in that pre-feasibility number that I think everyone should focus in on is our AISC, or all-in sustaining cost. And I think that's what you were referring to in the question, Kai. So our AISC is in 2021 was about $800 an ounce. So about a 50% margin, 50% of the price of gold that we reported, the cost of producing it, which is a spectacular, extremely robust number, right? We expect that ratio to remain intact. So let's say the updated report, we're using $1,950 gold. I imagine we'll be somewhere in that range, $1,950 to $2,000. Expect the AISC to still come in around that $900, $950 range. So, very good ratio.
Yeah, no, fantastic. Like, what's the exploration upside, Luke? It runs a bit through that because I'm looking at mine life at 10 years. I think NPV, like if you do an NPV calculation, it makes sense to include up to 12, of course. So I'm curious, like, what's the upside on the exploration side there?
Yeah, and look, I'll reference back to what I said earlier. We could have continued to follow ounces because the mineralization continues to depth well below, what we've frameworked in our pit shell, and the mineralization continues laterally to the southeast. So we envisage this is probably a 2.5 to 3 million ounce deposit. But again, we could have spent another $25 million chasing ounces instead of showing that not just do we have an economic framework, but we have the ability to permit it. So whether we decide later on to want to go after more ounces or not, I don't think it's dollars well spent. I think anyone who looks at our geological model, even the one in our PowerPoint that we have online, you can definitely see that mineralization continuing to depth. And I think just having those ounces as inferred, brought in somewhere along the line would be more than satisfactory.
Yeah, I got a bit ahead of myself with the exploration question because I got a couple more questions on the PFS there, Luke, and the updated PFS. Like, what needs to go in there? Like, what kind of work needs to be done? Is it more than just number crunching, meaning getting proposals in from vendors, or do you still need to do like a couple confirmatory holes, like you mentioned earlier? Is there anything that still needs to go into that?
No more advanced engineering, but there were some subtle changes between what we put in the pre-feasibility study relative to where we stand today. For example, we were going to use a soil liner under our tailings. The state regulators came back and wanted us to put a artificial liner in. The cost was negligible, but just line items like that we just need to bring in and update. But no major shifts whatsoever. In fact, we're working with a large off-taker right now where we might be able to achieve even better recoveries through metallurgy, for example. So things are going on in the background, but they're not big ticket items. So
metallurgy is a good one as well to talk about. Like, I don't want to get too granular and get too detailed, but it's an important one for the economics of a mine as well. What are some of the headline numbers there?
Well, you know what? the recoveries, I think the real headline number that that the investor would care the most about is just what the concentrate looks like. And the concentrates are highly valuable. It'll be a very competitive concentrate because it consists of over 20% copper and then somewhere between 2 and 3 ounces of gold, but no fluorine, no uranium, none of these byproduct elements, that deleterious elements that make it less attractive and less valuable. So we've heard from all the off-takers that it's going to be a highly marketable concentrate that would sell anywhere, and including have a high demand into Asia, into Korea and Japan. So recoveries are good, in the 70% range on gold, on copper, and same with on our gold. Those could be increased if you brought in a CIL plant post flotation. There's a couple 100,000 ounces that will remain in the tailings that could be gotten in the post production or later on with some permitting adjustments. But as you can see again by those economic numbers within that PFS, that is a very good, robust story.
Okay. You mentioned you're all permitted, which is great. You got a PFS update coming out, but usually you shouldn't build a mine off of a PFS. So the question is now, what's the game plan? Like, how are you going to get to a build decision here, Luke?
Yeah, well, again, so thankfully I brought in probably the most competent gold mine builder on the planet to run this company. So as I said, the PFS was basically a feasibility study light, but all of our extensive engineering, everything has been completed to conduct that final feasibility. What we're avoiding right now, truth be said, Kai, is just date stamping a feasibility study when we've found and discovered all these other additional benefits around the project that we want to bring in and include in that sort of feasibility final analysis. So we're not racing off to do it because we don't want to go and raise $250 or $60 million right now to build this project when the mining sector is still a little bit beleaguered.
Beleaguer. I need to Google that word. I don't think I've ever heard that one. Beleaguer.
Beleaguered.
Beleaguered. Yeah, it's like I'm bewildered by that. Like it's completely confusing, right? So no, that's interesting. Okay, so what are some of the next steps now? You're fully permitted. PFS is coming out when actually? That's a good question.
Oh, sort of 30 to 60 days. I'd expect to see the updated pre-feasibility study. In the meantime, there is optimization ongoing all the time. You're always looking for better ways to manage a mine, to manage mineralization. Minimizing construction and footprint. So that's ongoing daily. Obviously, we're always, dealing with other individuals. We're now exploring some of the green and carbon credits that will come naturally through this project, especially with, the post-production pit becoming a water storage facility. And then the very, very big one, Kai, that we haven't touched on is, well, hang on, if you're going to have an open pit and leave it and fill it with water, what are you going to do with all this extra rock on surface? Well, we've done extensive, again, metallurgical work on that granodiorite that's sitting on surface, and it's a highly valuable aggregate source. So our neighbors to our south are Martin Marietta, very large materials company, New York Stock Exchange listed. They are selling this granodiorite and they're just mining just that rock. They're selling it for $20 to $25 a ton. Well, through our mine plan, we have 35 million tons of that very rock sitting on surface for free. So, I mean, I'm no mathematician, but that's $700 million worth of free commodities sitting on surface that, we own and we have the right to sell. So that's not anywhere in our economic forecast. Our NPV5 right now is $323 million, yet we have $700 million worth of free rock. So as you can imagine, that's a real big kind of ticket that we're pursuing right now in terms of logistically finding a way to deal with a bulk commodity. And so we're working closely with aggregate specialists, market specialists within the aggregate space. We've been approached by a large railway who wants access to that rock. It's fun times, we'll say.
I can imagine. Yeah, absolutely. If you were to sell that aggregate, and not just to California households, right?
No,
To replace some of that grass out there. So,
yeah,
no, no, fantastic. Look, I think we've covered a lot of ground here.
yeah.
We're going to put a bow around it. So, 30, 60 days, we'll put out the PFS. Any other news items we should be looking forward to?
Well, again, look, just keep an eye out for us talking about these optimizations and some of these additional economic benefits to the project as we work very closely with both the local community and with the state of Wyoming. And, I'll just refresh everyone. Our project sits on state of Wyoming ground, and that's why we've been so fortunate to be able to get it through the process of permitting, et cetera, in a timely fashion, is because we're dealing with real people just 20 miles to our west in Cheyenne. So we continue to work with those people very closely. We don't have to deal with any federal agencies whom are all kind of handcuffed right now in terms of awarding permits, et cetera. So there's going to be news. We are not sitting on our hands in this company whatsoever. We got the permits in April of this year, and we are just full steam ahead. We want to add value, right?
No, fantastic. Awesome. Luke, thank you so much for making the time. Thanks for running us through the USAU gold story here, US gold story. Yep. USAU is the ticker, obviously, on the NASDAQ. And really appreciate your time. Thank you so much for coming on. And everybody else, thank you so much for tuning in here to the Gold Newsletter. If you haven't done so, leave a comment, leave a like. What do you think of the conversation? Did we ask Luke the right questions? I hope you got a lot out of it. Of course, we're doing these interviews for you, not for us. We want you to learn something from them. I hope you did. If you haven't, let us know. We'll change our questions. We'll adapt. We'll try to make this as usable for you as possible. Thank you so much for tuning in. We'll be back with lots more here on the Gold Newsletter channel. Thank you.